Hey everybody, welcome to another edition of Tuesday Talks with Ashley Hanna and Angelo Datseris. Today we are going to be talking about all the latest real estate news and things going on and things that you need to know about the real estate market. Give me a second, I'm waiting there he is. Hey,
Hey, what's going on?
how's it going?
Good. How are you doing?
Good.
Uh, crazy. So I'm at the office today. Yeah, it's too busy. Too busy to go home. So
That's
I'm
fine.
ordering lunch in.
Perfect.
Yep.
Perfect. So what's going on?
So, oh, not too much. Tell me about that podcast with WS Inspect, right? WS Inspect?
Yes.
Yeah.
Yeah. So it was me and my husband James on it, and we basically they were asking us questions like what's it like to be you know, how to James specifically, like how's it like being married to a real estate agent, and like what kind of roles do you like, kind of take on, not necessarily intentionally, but as a byproduct, right?
Right.
And also about like work-life balance, like how we both juggle work-life balance. Me being in the real estate industry and then him, with his career.
Yeah.
And I basically was like, I don't believe in work-life balance. I'm like, I think it's like a buzzword.
What's work-life balance? What do you
Yeah.
mean?
I mean, when you're doing what you love and you own your own business like we do, um, you like your life is your work and your work is your life. I mean,
Right.
and everything kind of like goes into that bucket. I totally believe in like disconnecting and unplugging. But that to me is something that you make time to do, and
Right.
however much you do it is how much you do it. I also think that like, hey Morgan. What are your thoughts on work-life balance, Angelo?
No, I mean, I definitely think that you need to kind of disconnect for sanity reasons. For me, I've been doing this so long, it's just kind of the norm. I don't, and to me, I kind of enjoy doing, and not just like, of course I like helping clients and this, that, and the other, but I love working on my business instead of, and in my business, if that makes sense. Like what I sent you over the weekend with the Linktree stuff, and just,
Yeah.
just doing, I kind of enjoy figuring that kind of shit out,
Yeah.
and so I don't, I know that I have to do that kind of stuff, but I'm not like, oh God, I gotta do that. It's just, putting on the back burner.
Yeah.
I enjoy, because it is my baby, of course. So
Yeah.
it's, I'd probably be the same way if I worked for somebody, because you are independent, you have to be under somebody's umbrella, but still, it's your own, you're your own, basically your boss. So you make what you want to make. If it's your, what's that phrase I'm talking about? It's your destiny. I mean, if you want to, if you don't want to work that day, you don't have to work,
Right.
but if you do, you do. But I'm always, I'm just born, I'm bred, it's in my blood just to work.
Yeah, I think
So
we're similar in that. And I think one of the cool things, at least about where I am, and I think this probably is true for you, is that we are really passionate about what we do.
yeah.
Like, I feel blessed every day that, I get to help people with finding their home, selling their home, learning about all things home.
Right.
And so it's not like something I think of as a career. I mean, yes, it is my career, right? But it's also just like a part of my life, and it brings me joy. So I guess if like you are doing something that you didn't like, and I have done something, right? I have been involved in a corporate career that I did not like, and work-life balance, if you would have asked me then what work-life balance was, I would have had a completely different answer, right?
Right.
Um,
Yeah.
so yeah, I'm really
No,
excited.
because I'm sorry. I didn't mean to interrupt. Go
No,
ahead.
go ahead.
No, I'm always, you know, I rarely ever have my out of office on
Yes.
because I'm never, yeah, I may be out of the office, but I'm always working. Even when I'm
Yeah.
away, I'm working, you know. And I was reading it's funny because I was reading an article and somebody was, I think it was on LinkedIn talking about, um, when you're self-employed, you should rarely have an out of office on unless it's, you know, an intimate weekend or something with your wife. Well, you know what I'm saying? If,
Yeah, yeah,
you
yeah.
know, because you're always working, you know, it's part of it. And for me, it was interesting to read something like that because I was like, oh, I rarely ever put my out of office on, you know,
Yeah.
even when I am out of the office on a weekend or whatever,
Yeah.
I'm always checking. I'm always checking
Yeah.
my email. I'm always getting back to my clients and, you know, and it's just that keep that constant communication. Um,
Yes.
so, yeah.
Yeah. I think so that's kind of what we talked about on the podcast, and I'm excited. It airs next Monday, and I'll be sure to share a link for everyone to check it out. That was my very first podcast too. So I've
Oh, that's
never been on a
awesome.
podcast.
They're fun,
Um,
right?
yeah, it was really fun. They did a great job of hosting, and I felt very honored. So,
That's
um,
awesome. Well, maybe one day I'll be on WS and Spice podcast. Hint, hint, wink, wink.
yeah, yeah. Next, yeah. Oh, look. Yes,
Yep.
definitely.
Oh, yeah. I
There
saw
we go.
that.
So, you know, some things are going on in the headline. So, two specific headlines I wanted to ask you about, Angelo. That one of them is like, I guess, a news special that's going to air. I usually listen to, oh, thank you. I usually listen to or watch NBC, WCNC here locally in
Uh-huh.
Charlotte, and they're getting ready to air something about how like mortgage brokers are like it's something about discrimination, and basically like people are get discriminated against based on their race when it comes to lending, and I of course have a problem with it, and that headline alone just like is very triggering, I think.
Who is it on? WSOC?
WCNC,
WCNC?
WCNC, yeah. It's basically saying that local brokers
Are they just lenders or like are they targeting brokers?
they said the word broker.
Well, that you know, there's a lot of different people's meanings to that. But anyways, interesting.
Um, and I was just like, I just think that is an unfair, like, well, I mean, I don't know. I think it's just a little bit, sorry.
Yeah, no, it's okay.
Stella.
I don't know. I haven't seen that. I haven't seen that you know, that news, that headline. I haven't heard much about it. But there's, you know, the CFPB, which is a Consumer Financial Protection Bureau. They're ramping up enforcement on discrimination. So I'm not sure if it's maybe just a local thing or because the CFPB is nationwide.
Yep.
So they're said that may be part of what they're talking about. I don't know until I read that headline, read that article. But
well, I mean, too, it's like I don't understand how a lender, and I'm ignorant, right? So like this is me just like asking in an ignorant way, like how would I don't know how you would discriminate against somebody because you very rarely are meeting these people in person.
No.
Right?
Yeah. No. I don't know how. I don't know how you can discriminate unless they're reading the loan application and they're seeing that it's a specific, you know, if it's a specific race. you know, or ethnicity that they're saying, well, I don't want to do business with this person. That's got zero bearing in how I look at clients. I mean, every possible person that I can put into a home that is looking to purchase a home or refinance, I'm going to put them in a home if I can do it.
Yeah.
So that's, I don't, and I've seen the CFPB talk about this kind of stuff. I'm like, well, I don't get it. I don't get how you can discriminate. I mean, it doesn't matter what race you are, what color you are.
Right.
If you don't have the credit
right.
or the income to purchase a home, you don't have it.
Yeah,
so
that's what I was thinking.
So it doesn't matter. So I don't personally get it. I don't know how they're, you know, tracking. They track it with the HMDA data. I know how they track it, but I just don't. I don't see how. I don't know how it happens. You know, I'm a smaller firm. I'm not the big, you know, one of the big boys who have, you know, hundreds of thousands of applications come in. I see what I see. So
on the applications, is that even a question about like ethnicity?
Yes, it is.
Okay.
So when you're on the application, and the new application, actually, the new URLA, Uniform Residential Loan Application, is out, and as of March 1st will be basically implemented. Fannie Mae, Freddie Mac, they had to basically modernize the new application because of, you know, things are changing. I mean, it hasn't been changed since like 2008, 2009. So, and it wasn't really back then. There wasn't very many changes anyways. But so I'll just kind of tell you what's on the new, or how it's kind of like how it's broken down here. So when they ask you, okay, citizen, you know, residency type, of course, but then you have, blah, blah, blah. So it asks you, have you asked race? You know, and it gives a bunch of different options here. It's got American Indian, Asian, Chinese, Filipino, Japanese, Korean, Vietnamese, other Asian, Black or African American, Native Hawaiian, Pacific Islander, Native Hawaiian, Samoan, other Pacific Islander. Is it mandatory
for that box to be filled? Is that a mandatory field?
They can choose. I do not wish to. Okay. I do not wish to provide this information. The same thing goes for gender. If they don't want to provide the information, they don't have to. And the same thing goes for ethnicity. So you don't have to provide that if you don't want to.
Yeah, I mean, which is pretty much standard when it seems anything that I've seen that I'm filling out or whatever, it seems like it gives you a bunch of options, or it gives you the option to like not identify.
To not identify, correct.
So I don't know. I'll find out more information on that and share it. But I don't know. I just like I guess it's a story they're getting ready to air. So like I keep hearing the commercial over and over again, and I'm like, really? Oh my God, yes.
I want to find it. If you can, when you find the link, send it to me. I'd like to check it out.
Will. Yeah. And then the other thing I wanted to talk to you about is like what is going on with rates, because I'm like gonna have an anxiety attack.
Yeah, you and me both. So there's been after President's Day, and going into that weekend, there was kind of talk that going into any holiday weekend, they position themselves for, you know, because it's a 3-day weekend. Monday is the bond market's closed if it's a national holiday, so they kind of poise for opening because the other markets, the Asian markets are open and the European markets are open when we're not. So if things are crazy over there, then it could get crazy here on that Tuesday. So there was a massive sell-off in the mortgage-backed securities since that Tuesday morning when we came back from President's Day. Last Tuesday. So Tuesday, Wednesday, Thursday was not that great. Thursday and Friday were horrible in the bond market, And then the same thing. It started this week too. Today, the Feds spoke. The Powell has spoke, and we're actually seeing an easing, just a little bit, and coming to kind of doing a little bit of a reversal, because when you have such a spike in interest rates, there's usually going to be, I mean, and if it's so quick, it's usually knee jerk, and if usually just some sort of sell off, and then it usually kind of comes back down a little bit. So it looks like, fingers crossed, okay, it looks like that there's already, because I've gotten already 2 reprices for the better that have come through the email in the last hour.
Okay. Good.
Yeah. So and so reprices for the better since rates came out this morning, because last week I was quoting rates in the morning and they were gone in the afternoon. And like, till I get a call like the next day or 2 days later say, no, I want to lock that loan. I'm like, sorry, I can't do it.
Yeah.
You know,
That
I just
ship is
can't.
sailed.
I'll requote you, but then this estimate is good for like the next 2 hours, you know, honestly.
So crazy.
Yeah. So, and I've quoted someone this morning too. This is like really early in the morning. It's just, yeah, it's crazy. And it's not that it's rare that there's volatility like this, but it's rare that it's such a drastic spike.
Right.
Because, I mean, we lost 200, since the beginning of February, we've lost 200 basis points for the 10-year treasury. So it's just nuts, you know. And going into President's Day, or sorry about that, going into President's Day, I locked a bunch, and then that Tuesday morning, just kind of reading the headlines and seeing what was getting ready to happen, they knew it was going to be some deterioration in the bond market, but not like that. So I went ahead. I called all my purchase. I think I called and told you with
you
one.
did.
Yeah, and I was like,
I need to go.
Ah! Yeah, and I just called everyone and said, look, this is kind of where we're at. We need to go ahead and lock right now. I was like, I'm not sure when the end in sight is going to be, but we need to go ahead and just lock, pay a little bit more just to lock it for the extended period of time, because I didn't plan on locking until, you know, I like that locked out sweet spot, like 22 days.
Yeah.
But, you know, 40 days out, 45 days out, lock. And I'm glad every single loan in my pipeline is locked. And I'm glad, because now I can rest easy at night.
Yeah. So a question, if you lock and
what up, J-Mac?
And they reprice for the better, like you're saying, they don't get to, like, their rate is locked at that price no matter what.
Correct. Because
and there's no way to change it.
There is no way, unless we send it to a different lender. But
Ooh.
Yeah.
But that's bad.
And so that's bad. Well, me as a broker, I have agreements with all my wholesale lenders. I have like pull-through rates that I have to 100%. That's 100%. It influences the mortgage rates, the stock market and bond market. That's the economic calendar. It affects the interest rates 100%.
So a question was just asked, does the market influence the mortgage rates? And Angelo said yes.
100%. Yeah. So, I mean, I can't just lock, let's say I just lock, you know, $2 million in, $2 million in loan volume, right? I lock it today, you know, and then a week goes by and rates drop a little bit. I'm going to send this to another lender, lock another $2 million. No, that's a very bad look on me, for one. And two, they literally set aside money for that particular client and that property, because they have to pay a percentage of it. Once you lock, let's say it's $100,000, they have you know, margin calls, so they have to set aside. They have to basically take a chunk of that and give it to the bond investors and say, all right, I'm going to buy $200,000 at this particular rate, and this is where he locked it at the coupon. So it sets it aside for them to negate any other market fluctuation, good and or bad. So it's kind of like the bond investor said, all right, well, you're going to give me that. And it's basically a forward guarantee saying you're going to deliver this loan to me in 30 days, 35 days, 45 days at this interest rate. That's why there's fluctuation daily when if you don't lock it.
Yeah, I mean, I feel like we kind of got spoiled, and maybe people have gotten a little bit complacent because, like, we have had these really low rates, and a lot of people are right there, you know, when you give them an estimate, they're like, oh, okay, this is fine. And I'm like, listen, it's not fine until it's locked in, right? We're
Correct.
under contract. We have a settlement date. And I was like, you know, Angelo is going to guide you to that, whatever that looks like. Um, and so that's where discrepancies can come up from, like when you go initially to go get pre-approved, or like right when you go under contract to you locking in, right? And
Right.
sometimes you got to make some judgment calls because the markets
Yeah.
are moving. And we've been saying this, the rates are going to go up.
Right. And here they go. Yeah, legit. Like the last week and a half,
Um,
2 weeks. That's what we're seeing.
Somebody like posted something too, I saw, that was like, if you didn't refinance, sorry. Like, I was like,
Yeah.
oh, wow. I'm
Yeah.
like,
You waited for the bottom. Well, guess what? Bottom's never going to come. Okay.
that's
For that
right.
person. And I
Yeah.
mean, if honestly, if you had a chance to get in at anywhere in the twos and you didn't because you were waiting for something lower, shame on you. Because
Yeah.
just shame on you.
Yeah. Yeah.
Because it's
Well,
such cheap
you
money.
know, right. And I mean, you know, these things just don't last forever because they do follow the market. Yeah.
They
Just
do.
like WS Inspect is saying. And so our economy, we've gone through so many different kind of interesting situations with COVID, with the presidential election, with, you know, these stimulus talks, that, I mean, it was only natural, right? I mean, the economy is going to start doing better, which is a good thing. But
Right.
as we talked about, I think last week or something, that can negatively affect rates if you're purchasing, right?
Yeah. Yeah. And in addition to that, you know, this kind of spike, this increase in rate, so quickly, the market's only going to take so much of that before the Fed's going to step in. It's like, all right, hey, let's settle down with let's settle
The
down with this,
brakes.
and they're going to throw some more money at it, and it's going to maybe ease off a little bit more. So, spike up like this is not very common. So, it'll be all right. We'll be fine.
So
We'll
I'm
be fine.
glad to hear that it leveled out a little bit, like
Oh
you've
yeah, we'll
seen.
see. We'll see. We'll see if
Yeah.
it keeps on. Well, keeps on heading back down, heading back south is where we want
Yes.
those rates to go.
Yes. Yes. Um, I have some numbers for the January local market update for the Charlotte region was released. Oh wait, we just got a question. It says, even with the rates where they are now, that would be a great way to use stimulus money because it's still lower than it was 3 years ago. If you need to refinance, no? Question mark.
Great way to use stimulus money. It's still lower than it was. And stimulus money, like if you get like to buy a home, is that WS Inspect? Is that what you mean? To buy a home, even though rates are Richie's.
The COVID stimulus, maybe?
Yeah, I'm not. Is that? Yeah, I'm not sure because I mean you are getting some money from that. You can use that for a down payment for sure, but I'm not sure if that's what she's referring to. So, if you need to refinance, anyways, yeah, if you could clarify that question, that would be fantastic. There, WS Inspect. Anyways, your numbers.
So for January in the Charlotte region, right, which is like all the surrounding counties in Charlotte, and some of the surrounding counties that border us in South Carolina. So these are the January numbers. So new listings, and this is year over year comparison. So new listings in January of 2020, we were at 4,663. And this year we were at 4,301. So just down 7.8%, which I mean, I feel like that's pretty standard for January, honestly. Pending sales increased year over year by 15%, which is good. So I think what's happening too is that people are even going under contract before anything hits the market, right? So you're not capturing the new listings, right? You're just going straight to pending sales, which is, you know, I'm in that situation right now with a client where it didn't go to market, that we just snagged it before, and now we're under
Right.
contract. So because there is such an inventory crunch, people are getting resourceful and they're just making deals happen that way. Like, you like this house? All right, let me reach out to them. Let's see what we can figure out.
Yeah.
Closed sales were up almost 12% year over year. And the average sales price. Okay, what do you think the average sales price was in January?
Average sales price. I'm gonna take a stab, if I remember correctly, from last month. $296.
$339.
Oh my God, that's way higher than it was
Right?
last month.
It's almost actually $340 because it's $339,984.
Wow.
Isn't that crazy?
Man.
That is an
Man, oh,
increase
man.
of 13.6% year over year in sales price. I know.
That's nuts.
Oh, yeah.
She was
I know.
close.
I
She was
know.
close.
I mean, that is insanity.
Jesus.
And then
And last year it was
it was $299 last year. $299,303. That was the average sales price in January of 2020.
wow.
Um,
It was 50 grand more, 30 or 40 grand more. Wow.
I know. You were more close with the median sales price.
Oh, okay.
Yeah,
The median. All right.
Yeah,
all right,
because the median sales price was $285 in January of this year. So you were close with that. I'll give you that. You know what's up? You know what's up? You've been listening. And this is a really crazy one. So the inventory of homes for sale in January was 3,370 homes. That's how many homes were on the market that went on the market in January of this year. Okay. January of 2020, we had 8,383 homes.
Wow.
I know. I'm like,
wow.
that's
crazy.
I think it's like I'm saying though, because the houses are people are snatching before they're going to market. So I think that's a little bit of the discrepancy. But I mean, that number is insane. Like, we're 5,000 homes less in the Charlotte metro area and surrounding counties. 5,000 homes less.
That's a lot. And in this particular market, that is a lot.
I know. I'm like, what?
Wow.
So, I just think that inventory is going to start to do better, right? I mean, I think that we're going to start getting back into the seasonality of real estate. I think that with vaccines coming out, that's going to make people more comfortable to just go ahead and get their houses listed or make decisions there. But I also think that, this trend, what we just talked about with rates, they're going to keep kind of ticking up a little. I mean, because that's only natural. Correct. And so that is going to, I think, temper some of the buyers in the market. Yeah. Which is gonna affect, right? It's gonna affect the list price of homes, the sales price of homes, because you're not going to be able to be as aggressive. Right. Which is oh my God.
Does it scare you?
Woo! Lord.
That's funny.
My guard dogs. I have a neighbor that's just running in front of our window right here. I'm like, ma'am, I'm trying to do a live right now. Can you just keep it down the street?
Right. Pause.
Yeah. Anyways, so the market is we're struggling on the inventory side. That's not news. But I think I'm very interested to see what February is going to look like. I think we saw more inventory in February hit the market, and I think builders were able to ramp up a little bit more. I also saw a headline from the National Associations of Builders that that now the cost of lumber is increasing the sales prices of new construction homes by $24,000.
Yeah, because I think the cost. Who was I talking to about the cost of lumber? I think it was somebody that was trying to build a home, like kind of be the GC, and it was exponentially more than it was like 6, 8 months ago. He's like, it basically, he decided not to, not to build because of the cost. The cost was so much
That's
more.
crazy. I wonder, and I need to dig more into this. Like, what is it the demand that's driving the cost? Is it the lack of supply? Like, I wonder
I bet you
what,
it's a both. I bet you it's the
yeah,
supply chain for it and the demand.
yeah. I just think that, that's troubling just because we're hurting. I mean, it's troubling around the board, right? I think that it just makes it harder to help this inventory situation we have, and therefore
Right.
it's just making everything really difficult for buyers in the market who are
Yeah,
trying to get into the market.
and what you said about with rates, kind of taking up the buyers because it's going to be a little bit more expensive to get into that home that was, last year was 290 or 300 is now 340. That is going to settle down a little bit, and the sellers are going to be a little bit more, they won't have as many offers as a
That's
14
right.
or 20 multiple offer situation that you're having now with basically every sale on the market. So it's going to level off. And then I think, and then everything will. Once that does, everything will hopefully come back down into the atmosphere.
Yeah. I mean, this cycle I think is interesting, right? I do I do think that we're in an abnormal situation, and it overly favors sellers sometimes, and this may sound bad as a real estate agent for me to say this, but like almost to a negative, in a negative way. Like sellers are just, it's too much, right? I mean, even with my sellers, I'm like, okay, we need to talk here, right? Realistically, like you're already making amazing gains here. So let's
Right.
let's let's talk about this. And because
Don't.
you just don't want to see, I, as a real estate agent, like some of the stuff I see people paying way over like doing appraisal waivers and not, I'm just like, I mean, okay, yeah, I guess that's a strategy if you're going to like die in that house, but putting all that pressure on yourself to find that forever home and then wait and then overpay for what it's worth is
Right.
just so risky. But that's not for me to say. So, if that's how eager you are, but don't contact me next year to sell that house.
Yeah, right. Yeah, for sure.
But it's just interesting. I think this year will, as we get further into the year, it'll paint kind of a interesting picture that,
Right.
of some positive things too. I mean, it's positive for sellers. It's positive for buyers right this minute with the rates, but those are going to come up, and
We'll probably be in the low, if the feds don't throw any money at this, if it keeps on going, if they don't, I mean, we'll be in the threes. We'll be in the threes mid-year, mid probably late third quarter, early fourth quarter.
Really?
Yeah.
So okay. So you're saying
If they don't do anything to kind of combat what's kind of going on right now with the market, the stimulus plan is like 75% of that was not. There's a lot of bloat. It's a lot of like pig farms and things like that.
right,
25% was like GDP and like for helping the economic growth. Which housing, we all know, housing is like the backbone of the economy. So I don't. We'll see. We'll see what happens.
Yeah.
There's a lot of people that say they know. I mean, I try to keep up as much as I can with it, but it's confusing, and people aren't right. They just
I would
can't
agree
call
with
it.
that.
They just can't call it.
I don't think it's fair to even claim that you can call it unless you actually like were involved in writing the stimulus package, which is
Right.
still being hammered out. So
Yeah.
I'm with you on that. Whenever anyone tries to say how the market's going to be, I'm like, how do you even know what you're talking about? You don't know what's included. And not to mention, like, real estate is typically a leading indicator. Like, it's a lagging indicator rather. So like, things happen in the rest of the economy and then real estate follows. That's what that came from a podcast I listened to. I'm not an economic person, but this person who does the podcast is, and that's what they say, which makes sense to me. But anyways, we're just all out here speculating.
Yep. Just trying to make it in this real estate game.
Yep. WS Inspect said economics and weatherman are the only two professions allowed to be wrong. True that.
True story.
Yeah.
True story.
That's true.
Well, cool. Well, good stuff.
Yes.
Well, next week, I think we should talk about insurance, because I had something that came up yesterday. That was something new that I have not seen. We haven't seen, so it'd be good to talk about that.
I agree.
Cool.
So drop us all your insurance questions and yes, and anything else. And thank you so much for tuning in. Thank you.
Yes, thanks WS Inspect with all your questions. Love it. Keep them coming. Keep them coming.
And make sure to share us with your friends on Instagram, or drop us a comment. We love any kind of feedback.
Yep. Good, bad, or indifferent.
Alrighty.
All right. See you guys later. Thank you.
Bye. See you next week.
Bye-bye.